Good evening, I'm Giuseppe Basile, I'm the Untitled Trader. You can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening, today is May the 7th, 2014. It's Wednesday, it's 15 minutes to 11 p.m. time in Toronto. In this video, I'm going to review for you all the 11 markets I follow, and this is a daily update valid for tomorrow, May the 8th, 2014. So let's start from the euro dollar. What you see on the screen is the daily chart, and as you know, we have this measure move, and price went very close to this measure move, and sorry, to the target of this measure move, just a few pips away. I don't consider this target hit. And as you can see, is close to previous highs, but the real reason the market will get there is because program trading is actually pushing price from this level 137.90 into this first level of target. So that's where we are going to see this market. Moving to the ESP 500 here, this market found resistance at this 1882 level. This is not a short, this is a profit taking, and that's the reason why we are seeing this behavior first time, second, third and fourth time here. So there is now a possibility for this market to retest this level. This is a distribution, so we might anticipate maybe a larger drop after this distribution is completed. So be very careful here with longs. I don't think this is a good moment to be long this market. We know that we had a basket measure move here at this 1735. It was with a stop level 1728. It was 1735 in before March when we had at the beginning of February when we were in the March contract, and it hit first target. So we're seeing profit taking here. It's not a reason, not a moment to be long, and not a short as well. So we still don't have that confirmation. Moving to the dollar index, after the big move yesterday, the dollar index is breathing a little bit here. I want just to remind you that this market actually reached the target actually very close to the first target here of this measure move, with resistance at 80.07 here. So there's a possibility for this market. I'm going to change back the scale here. There's a possibility for this market to retrace before a continuation lower, and a full retracement would bring price into this 79.58. You know, they may be asking a little bit too much, so I don't think the dollar in this situation has the strength to get there. So we might see maybe a shallower retracement and around this previous area here of support. So this market is still headed lower. If you review yesterday videos, so the weekend videos, you can see where this market has the potential to go. Moving to the E-mini gold here, futures. You remember that after yesterday, after 2 days, 3 days ago action, we observed that the sequence of measure move broke the back of the bears, as I like to say, and actually the bears initially participated starting from this 12.99 level, and they were able to defend the 13.07, 13.08 level here. Price never got above this level, but actually on Monday this level was taken out, and that was an indication for us that this market has strength to continue higher. Now yesterday I've showed a level of potential entry, and I said you know, if market comes back to this 12.94, this could be an opportunity for an entry with a stop below lows. This market is trading actually all the way halfway back here from the previous lows, and so it's still defending that area. In any way, as you can see, the market is actually retesting that most important level, that more important level, 12.86 here, and of course we can study the 15 minutes here to see what is going on, right? So this market is moving in traditionals, although it's touching the It's actually touching the second target here, but we need to look at price, what it's doing, and price is systematically retracing to the all the way halfway back here first time. And again here it hit a second target, so if we wanted to be aggressive, we could see that we could say that this market actually already confirmed support. But I want to see I want to see another level for a better confirmation, and the reason for this is because price already reacted to this level 1292. So I want to see price going above 1294. Above 1294, the gold becomes a long again, and we have the potential to revisit 1328. So this is a potential trade to follow here. Moving to the Japanese yen majors, and starting from the daily again. We saw this market as anticipated retest this 101.53 and showing a reaction here. So first, second, third, fourth, fifth, sixth, and seventh time this level has been tested. There is obvious participation here. And yesterday I provided this this draw for confirmation. There was the highs to lows. And as you can see here, 101, 92, 93 was pushed on the upside, and that gave us confirmation. So as I mentioned yesterday, an entry could have been this level with a stop below lows. And if this market, so this market is still an entry at the moment, it's still at entry at the moment. So if it retraces, can give a better entry as well from lows to highs here. If it retraces into the 101, 74, 75 here, this could be an entry with a stop below lows. Euro, Japanese yen, the daily, a similar situation, and we saw this trace that I gave you in the weekend still holding, so there is the potential for this market to continue higher as soon as the move in the euro resumes higher, right? So is this an entry? Well, it could be if you don't risk a lot and put a stop below these lows here. Actually, a stop below 141.08 would be more meaningful here, because if we get the stop, this level will also be taken up very probably. So this could be an entry and could give you a 2 reward to risk ratio here with a stop below 141.08. So there are a lot of opportunities around, as you can see here. Pound versus Japanese yen is the more bullish of the three, and however is still consolidating here. We could still see this market moving lower, and remember that, as I'm going to show you in a minute, pound versus US dollar is in a long, and it has the potential to continue higher. So not really an edge in this market. I wouldn't take a long position, I wouldn't take a short position here, so just wait. I mean, opportunity will come. Look at these swings here. There was opportunity to trade, to time this trade. So the volatility in this market is very, very small at the moment. It's not worth getting involved. Moving to the pound versus US dollar, you will remember that now modeling this market in a slightly different way, and that's something I observed yesterday, but it is still useful, because it's not something that I would identify before, and what we saw here was participation in this 166.86, and there was the first target hit and the second target hit. So this gives us very good information, because now we can study what happens when the market will come back into the next measure move long here, which is actually this 169.07 level here. So if price pierces this 168.85, then there is the possibility for a continuation lower and trading into the next measure move long on the daily time frame. And that would be from, as I showed you yesterday, from lows to high. So we have very clean, neat levels here, and it's very important to follow these markets. Moving to the Australian dollar versus US dollar, this market, as anticipated, was preparing to continue higher, and the reason for that is you will remember that yesterday I mentioned the fact that this measure move that I showed broke. That was not a big deal for us, because we had already a free risk trade, the second trade, but now what I would do, I would actually remove also the other trade for a small gain, but still, still important. And we could not anticipate this behavior for the Australian dollars. Australian dollar could just continue as it did in the past and correct as we would anticipate the high probability scenario. So not a big deal there. What is important to notice here though is that I gave a trace yesterday actually from these highs to highs, and there was an extension long. This market is actually trading a slightly different level, and as you can see, it's flying at the moment. But if you consider that level, and so let's start from this. If we consider this level and study the 15 minutes using the fib stalking technique, we could still probably catch the move here, because we would study the sequence of measure move lower here, right? So what we do is that we trace and we study what happens in what is happening in the market, and as you can see, at some point the market traded this 193.49 and it was approaching this level. So the next after he hit target here, we could actually trace the new measure move from highs to lows, and as we can see, this measure move failed, and the entry was then 93.37 above this red line, following the fib stalking technique with a stop below lows. And as you can see, that stop was challenged, yes, but was never touched. So this is a proof of the validity and the how useful the fib stalking technique can be. So those who followed this technique would be in a long now, with a long at 93.37 and a stop below lows. So the US dollar versus the Canadian dollar, this market actually today, as you can see, is holding at the moment, but it's actually challenging that 109.80, and actually at the moment is respecting it. And you will remember that what I mentioned is that we had a measure move here from highs to lows, and that was the way we modeled this price, right? And we saw participation at this level, 109.97 on the downside, which broke price into first and second target. After second target was actually hit, we saw a continuation lower. So far it's a continuation lower. So the next measure move in the sequence is this trace here, and as we can see, the market has been respecting this trace so far. So only if an entry long here, if it comes if we break above 109.17-18 here with a stop below lows, and this would be the entry in this market. And this will also mean a successful retest of this area of support. If we, on the other side, break below the 108.44, you can kiss goodbye this market. You're going to see much lower level for the US dollar versus Canadian dollar, so you can buy more goods if you live in Canada like me. Joking aside, moving to the New Zealand dollar versus US dollar here. This is not a short, don't be caught in this. This market has been a very good and resilient long market. Let me show you the sequence of measure moves. There were two beautiful measure moves that we actually traded. The first one was this one, a support 085.15 into the first target. The second one was a little bit more difficult. It took more time, about 35 days to this market to actually get to target, but it worked. And initially market finds support at this 85.46, never breaking 85.08, and initially didn't make it, went to retest this level again and went to target. So the next measure move we need to keep in mind is this one. So this market is still okay. If it retraces into 085.90, still a long. Don't be caught in this. This is not a short. Be very, very careful. Thank you very much for watching this video, for sticking around. I hope this is useful. There are a lot of opportunity out there. Good luck for tomorrow, and thank you. Bye bye now.